So hi guys, welcome back to another episode of the technical breakdowns. So today is on Wednesday. Fundamentally we have a lot this week on the side of interest rates. Today we're watching what the FEDS will do. We expect a 75 to 100 basis point rate hike. On Thursday we have Bank of Japan. They're the only country that have not hiked rates this period, so we don't know what they'll be doing. And then on Thursday again we have Bank of England rates coming back in. So those are some of the fundamentals that we are watching for this week, but obviously I'll first focus on the technicals. So today at night, probably at 9 p.m, we'll have rates coming out and then we'll know how to position ourselves in this market. So today I'm going to look at it technically, just technically what you're watching. I think fundamentally, yes, we expect rate hikes. How much is what we don't know, 75, 50, 100 basis points. And depending on where they bring out the rates, then markets may continue selling off. I think the trend is still to the downside. The trend has not changed at all in this market. So we can still expect some downward pressure to come in. But let's see, the short term, we might also see some bullish momentum. Just the normal buy the rumor, sell the fact story before the trend continues. However, I'm not trying to predict markets. Instead, I'll just be patient and wait for what will happen technically. Anyway, just going back to, I'll start off with gold. Technically, so gold has been moving lower for quite some time now, from 2000 coming down all the way to 1675. Last week we saw the break of 1700, which was a level that had held this market for quite some time, but last week was the first week where we saw a close below that level, and that marked the break of the top formation that we had at the 2000, 1900, 1700 level. We had this sort of a double top formation which was taken out last week, and I expect this week markets will continue selling off. I think in the long run you could see gold trade as low as 1500, 1400, depending on where rates will go. But I think in the long term, I don't think there's anything stopping this market from trading that low. If I go to the daily chart, you can see this market is still trading within this beautiful channel formation. Last night we had a very bearish close. I think today we'll still get the same. I'm watching what will happen at 1650. If we get a rejection, you could see a minor pullback, a break, and we see 1600 immediately in this market. I think that's the next level that I'll be watching. On the 4-hour chart, I'm looking for potential correction. So here I have a sort of a 60-40 probability. I'd say there's a 60% chance markets will continue selling off, but there's still a 40% chance we'll see a rebound to 1700, 1710, 1715 before the next leg of bearish momentum. That will change depending on where rates will come out and how aggressive the FEDs will be, but we expect a very, very aggressive Fed. So that's why I've said there's a 60% chance of the trend continuing to the downside, but I still think there's a 40% chance we'll see these moves to the upside. Next, I'll look at oil. So this is oil. On the weekly chart, oil has been sliding lower now for the last about 10 weeks. We topped at 120. We have now seen a collapse to about $85 a barrel, a break of 85, and I think we will easily visit 75 and $70 a barrel. Those are the next major levels on this market. If I just look at it from a daily perspective, I have this beautiful channel formation. I've been waiting for this third bounce at $90 a barrel for quite some time. However, it's not coming in. In fact, price action just keeps on forming candlesticks which suggest bearish momentum. So that means I'm waiting for a move back again to $80 a barrel to the downside, $78, $75 a barrel to the extreme. I wouldn't be surprised by a drop to $75 a barrel. I think that would be a very, very normal move relative to other moves that you've seen before. So if I just mark 75, that's where markets are sitting. So yeah, 75 S3, $75 a barrel easily. But if markets fail to grow below the S2 level, then we could easily see again the $90 a barrel mark before this next leg of bearish momentum. So that's my outlook on oil. On the daily chart, on the 4-hour chart, no clear pattern to suggest any move. So we had this sort of a first, second. I was waiting for this potential third bounce. However, it's not coming out as clearly as I'd want it. I was waiting for a correction to 87.5. Also, I wouldn't want to execute with so much volatility coming in. So I want to just see how the news will pass off. Then I'll know how to position myself moving forward. So that's oil. The Dow selling off aggressively. The Dow has come back from 32,500 last week to trade as low as 30,500. I still think there's some downside, 29,000, 27,000 in the extreme cases. However, for the short term, we could see a correction from the S2 level to take back the markets higher to 31,500, again 32,000. In a bear market, expect a lot of bullish rallies. They're called dead cat bounces. If you have done enough research in the markets, you'll understand that in a bear market you'll get some rallies which look like a correct, like the trend has changed, but in true sense it's just an aggressive rally to the upside before the continuation to the downside. We still expect the downside pressure, but again, like I said, we can expect some bullish momentum to come in. If 30,500 holds, we could easily see 31,500, and if we see 31,500, I don't see what's stopping markets from getting into 32,000. On the flip side, if we break 30,500, we could easily see 30,000, and if we see 30,000, I think 29,500 will be the next target that I'd be looking for. So I have, anytime I'm looking at markets, I try to come up with probability distributions, and then as price moves, I'll know how to position myself as the markets will be moving. The last pair that I'll look at, not the last precisely, but among the last one, is GBP USD. The pound has been moving lower now for quite some time. We're trading at 1.13, the lowest ever since I think for the last 40 years we've not seen the pound trade this low. Now we're at 1.13. Easily we could visit 1.125, and after that I think we could visit 1.1. In fact, I think 1.1 is more of a better level. As the dollar keeps getting stronger, I think the pound will keep getting weaker. As much as the pound have almost the same aggressive policy, I think here it's a question of relativity. How aggressive is one country and how strong is one currency? So looking at the pound, that's what I was looking for. I was looking for potential correction to 1.15 to retest that level before selling at 1.125. However, it didn't come along. Instead, we got a continuation of the trend. This means the risk reward was quite distorted, so I couldn't take that trade. So I'm just watching to see how markets will move. Probably we'll visit this level before we come back higher to 1.15. And the final pair that I'll look at is Euro Yen. So Euro Yen is sliding lower now after moving aggressively higher. We rejected 145 and now we've started moving lower. So we're now heading towards 140, I think is where we're heading for a minor correction. Let me just go to the daily chart. I was looking at this setup. It's one of the setups that I trade. However, I passed on it yesterday. The reason I passed on it was the context was not as good as the setup itself. The market was trading at a very high level, 145. We had seen a rejection of the R3, so I expected a correction before continuation to the upside. And you can see markets have actually started sliding lower, taking out on 42.5. 140 is the next level that I'm watching on this market. If we break 140, then I'll be looking at 137.5. However, I don't see a clear path after a break of 137.5. So you can just see clearly this was a beautiful bounce here, but it's been taken out and now markets are trading lower. So yes, we can be at 142.5. We could easily see 141.25 and 140, which is the next downside target on this market. So I think I'll stop there. I've covered all the markets that I normally trade. On Friday we'll do a recap on what is going on with the other pairs. The last one that I can look at is the dollar index. So dollar index officially tapped above 110. Today we've already created a new high towards the FEDS hiking. So we're at 110.866. We could easily visit 112.5 as the FEDS communicate today, depending on where they decide to, by how much they decide to hike rates. Personally, I'm looking for 75 to 100 basis points. So I think anything less than 75 to me is quite conservative, but anything more than 100 again is too aggressive. So I'm looking for 75 to 100. That's why I think there'll be hiking rates this time. So just watching to see. You can see already we're above 110. The trend is your friend here. I don't think there's any chance you should be selling this market. In the 1970s, when was the last time we had aggressive rate hikes, the ones we are seeing currently, we had the dollar trade as high as 150. I'm not saying the dollar is going to 150, but I think if they keep hiking rates, if inflation remains a problem, and if Powell remains as stern as he said he is planning to remain, I don't see why we were not going to hit 120. And if we hit 120, probably 130. But all these things can easily change depending on how things are moving. For example, you don't know what will happen between China and Taiwan and the US We still don't know the escalation between Russia, Ukraine, how far it could go. So there's a lot that's actually not baked into the price currently. But as things evolve, they could start being reflected in the markets, and that could change the trends a bit. But I think that's what I have for you today. So I think I'll stop there. I'll catch up with you guys on Friday when I'll be doing a recap. Peace.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.